When traders search for a GrandAxisWay review, they often expect platform features or legitimacy analysis. However, one of the strongest indicators of a serious trading environment is the quality of its market outlook. In 2026, macro volatility, liquidity fragmentation, and institutional positioning are shaping markets in ways that require structured analysis rather than emotional forecasting. A proper market outlook is not about predicting prices with certainty. It is about identifying structural pressure zones, understanding volatility cycles, and preparing for scenario shifts. One of the most searched questions right now is, what is the market outlook for 2026? The short answer, 2026 is defined by liquidity transitions. After aggressive monetary cycles across Europe and the United States, markets are entering a recalibration phase. Central bank communication is less predictable, and macroeconomic data releases are triggering sharper intraday volatility. In crypto markets, structural compression patterns are forming following previous expansion cycles. Bitcoin liquidity zones above major psychological levels suggest potential breakout attempts, but also increased risk of false moves. Forex markets, particularly EUR/USD, are reacting heavily to policy divergence between the ECB and the Federal Reserve. Gold remains sensitive to geopolitical uncertainty and bond yield fluctuations. Institutional flows continue to target liquidity pockets before directional moves. Another frequent question: how reliable is GrandAxisWay analysis? Reliability in market forecasting is not about predicting every candle. It is about framework consistency. GrandAxisWay analysis focuses on liquidity mapping, macro drivers, and volatility compression structures rather than emotional bias. Instead of presenting fixed price targets, the analytical model evaluates structural breakout zones, liquidity clusters, macroeconomic catalysts. This approach reduces impulsive positioning and emphasizes scenario planning. In a competitive market environment, analytical consistency is often more valuable than aggressive prediction. Markets in 2026 require conditional thinking. If liquidity above key resistance zones is absorbed without rejection, expansion cycles could resume across crypto and selected forex pairs. Risk assets may benefit from stabilizing inflation metrics and softer central bank tone. Gold, under this scenario, would likely experience controlled upward drift rather than explosive rallies. If macro data surprises negatively or geopolitical tension escalates, liquidity sweeps below structural support levels may trigger cascading volatility. Crypto markets remain particularly vulnerable to leveraged positioning imbalances. Forex markets could see sharp repricing under policy divergence, especially in EUR/USD. GrandAxisWay market outlook emphasizes preparedness rather than prediction. Traders are encouraged to evaluate liquidity, not headlines. A logical question follows: is GrandAxisWay legit as a source of market insight? Legitimacy in analysis is demonstrated through transparency of methodology. GrandAxisWay publishes structured breakdowns of liquidity levels, volatility cycles, and macro catalysts rather than promotional forecasts. A credible GrandAxisWay review should therefore evaluate the consistency of analytical frameworks rather than short-term accuracy alone. In trading, repeatable logic matters more than occasional precision.